Hey everyone, welcome back to Corporate Decoder. Today, VIVAKOR Incorporated just filed a 1-for-20 reverse stock split, and I am seeing a familiar pattern that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This reverse split is aimed at keeping VIVK on the Nasdaq, but history shows this is often a step before bigger problems. VIVAKOR Incorporated, a company in the energy sector, has just announced a significant change to its stock structure. They filed a Form 8, which is a report for significant events that shareholders should know about right away. The main event happened on the 10th of July, 2026. VIVAKOR Incorporated, or VIVK as it is known on the stock market, is taking a big step. The company was incorporated in Nevada. Their file number with the SEC is 001-41,286, and their IRS identification number is 26 to 2,178,141. Their principal office is located in Dallas, Texas. VIVAKOR's common stock is traded on the Nasdaq capital market under the symbol VIF. This is where things get interesting. VIVAKOR has elected to be treated as an emerging growth company, which means they have some flexibility with reporting rules. The core of this filing is about an amendment to their Articles of Incorporation. This is serious business for shareholders. What they've done is enact a 1-for-20 reverse stock split. This means for every 20 shares you own, you'll soon have only one. This move was approved by shareholders at their meeting on the 30th of June. The split officially takes effect with Nasdaq on the 17th of July. This is a pretty aggressive split, going from 20 shares down to 1. Companies usually do this to make their stock price look higher, often to avoid being delisted from an exchange like Nasdaq. This description is just a summary, and the full details are in another document attached to this report. Now, this section touches on how they're communicating this news. On the 14th of July, before the official filing, they put out a press release about this reverse stock split. The stated reason is to help them stay listed on the Nasdaq capital market. When a stock price drops too low, exchanges can delist it. A reverse split artificially inflates the share price to meet minimum listing requirements. The full press release is included as an exhibit. This part is important legally. What they're saying here is that the information in this press release is considered furnished, not filed. This means it is for public awareness but doesn't carry the same legal weight as a fully filed document. They're trying to be careful about what information is officially registered with the SEC. Finally, this section lists the official documents that are part of this filing. Here we see Exhibit 3.1, which is the actual legal document for the reverse stock split. And Exhibit 99.1 is that press release we just talked about. It is marked with a note indicating it is furnished, not filed. Lastly, Exhibit 104 is the interactive data file, which is standard for these filings. Now, this report is signed by James Ballingy, who is the Chief Executive Officer of VIVAKOR Incorporated on the 16th of July 2026. This is his official signature on behalf of the company. Looking at the bigger picture, a 1-for-20 reverse stock split is a pretty dramatic move. According to Stock Titan and Globee Newswire, this split is said to be effective on the 17th of July 2026. VIVAKOR's stock, VIVK, has had a very volatile year, trading as low as $0.2 and as high as $251.43. This wide range suggests major swings in investor sentiment and potentially liquidity issues. The company has only 20 employees and a market capitalization of $0. This indicates a very small operation or potentially a company struggling to find its footing. Historically, reverse stock splits are often used by struggling companies to avoid delisting. While it can temporarily boost the share price, it doesn't address the underlying business problems. For example, Kodak initiated a 1-for-20 reverse split in 2021, and unfortunately their stock eventually faced delisting. About half of microcap companies that do reverse splits end up being delisted within a few years. VIVAKOR's stated goal is to maintain its Nasdaq listing, which is a positive sign that they are trying to adhere to exchange rules. Aid solution. What truly matters is the company's ability to generate revenue, profit, and growth. The fact that they are doing such a big split suggests there is a significant disconnect between their current stock price and what is needed to stay on Nasdaq. This usually means the price has fallen very low for a sustained period. In my opinion, while this filing shows VIVAKOR is actively managing its stock situation, it is crucial to look beyond the share price. The real story is whether the company has a sustainable business model that can drive long-term value. For now, this reverse split is a defensive maneuver, not a sign of fundamental strength. The risk I am watching is whether this reverse split will ultimately delay the inevitable if the company's operations do not improve. What I am actually looking for is evidence of improving business fundamentals and profitability, not just a higher stock price. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.